commercial is the heartbeat of the city. Without it, you don't have tax dollars, you don't have workers, you don't have reinvestment, you don't have people giving to charities, all that stuff. So people really need to think about that. That's a direct message to whoever becomes the mayor or the governor or this or that this is what is, small business and businesses and people investing in our city is what keeps it afloat. What's the 5 Ps? Do you remember it?
Proper preparation prevents poor performance.
There you go. It doesn't matter how much money we get. If we don't close, it's no money, right? So no close is no money. I'm everything that I am because of my dad's death. And I wouldn't be as successful without his death. Welcome to the Jason Theory. This is season 2, episode 3. We are sitting here with Mike Marks, who does commercial. Give us a little bit of a background on who you work for, and then on top of it, just to let people know how much of an expert you are. Some people that you work with, huge companies and deals that you've done.
Sure. So I'm currently with Cushman Wakefield. I'm a co-leader of the Midwest retail investment sales or capital markets team. My primary focus has been in the urban center. My business partner focuses more on the conventional grocery anchored, power anchored, lifestyle neighborhood center space. So
when you say that, so like a large anchor tenant, and then like a grocery
Whole
store,
Foods or a Mariano's,
and then the little guys that come off of
all
that.
the small shop space and the out parcels and whatnot.
Yeah.
And then to kind of address the track record or experience question, just relative to my particular expertise, some of the deals that I've handled have been like the Esquire Theater on Oak Street or Nike Town on Michigan Avenue, the Jumpman store on State Street, the Maple and Ash and Urban Outfitters property on State in the Gold Coast, and a fair amount of stuff over in the high quality neighborhoods, the coveted corridors like Armitage and Damon and Southport, Fulton Market. So it's been very exciting. I mean, I was not always doing that. I got into the business 20 years ago with a different firm. I started at Marcus & Millichap, as a lot of people within the market did. It's an exceptional training ground, I think, in the commercial arena. And I was doing multifamily because that's sort of where the company had made its money. And as I was helping people exit those to the condo converters in the early 2000 craze, most of those folks were trading into commercial or retail assets. And I just was really drawn to the ability to read a lease and understand sort of access and upside and potential there, more so than sort of touring a 40-unit building in the Jonquil Jungle, which was, no shortage of excitement around those, but it just was a little bit more. I connected with sort of the analysis part of that, and then really started to pivot into retail, and then right after the GFC switched firms. So I was at Marcus about 10 years, which is like 37 dog years in commercial real estate. It's a highly competitive, very pretty aggressive sort of culture, and then was recruited by Cushman to sort of move up in weight class and step into more of an institutional investor segment, kind of middle market, instead of Marcus, which I think has made most of its money over, historically in the $2 to $20 million price point. We were like $20 to $120 million at Cushman. And so our thesis and theirs worked. It took a little time to kind of cultivate a different set of clientele and to demonstrate that we're just transferring the same knowledge, even though we didn't have necessarily a long track record of $100 million deals, but kind of came out of the gates with some really exciting assignments and parlayed those into, a pretty good 10 years so far. I think I just celebrated my 10-year anniversary at Cushman recently, like 2 months ago.
Yeah, congrats.
Thanks.
So residential, which is mostly emotional, at your residential experience, which was more of multi-units in that space up to 40 million, was it still a lack of emotion and mostly numbers based, or was there some emotion involved because it was residential, or just pretty much emotionalist, number based?
Great question. I usually do share that with people when they kind of are like, so wait, you're, a realtor? It's like the residential piece of it.
It's two different things.
So different. And I feel like that is the
difference,
defining point is the emotion.
So was there any emotion?
No, not that I experienced. I mean, I think it was really about whether or not the analysis led to a path to profit. People could understand whether it was through conversion or through pushing rents by making some, upgrades, or there had to be, like, the evaluation of it from a number standpoint was really the driving force. And debt played a big role in that. But people are detached emotionally. I mean, you can love a building or appreciate what a developer had done, or a particular lineup, or it can be your shopping center or your preferred, kind of property within your lifestyle. But that only gets you so far. At the end of the day, it has to pencil. Otherwise,
when you guys look at that and you look at the penciling in of stuff and you look at like where things make sense, do you ever take a look at, all right, it's, hey, in 1998, Bucktown should be getting an 11 or 12 cap or whatever it is, right? They should be making this much money. This deal's not going to make that much money, but we see where this is going. Because I know from like up to 10 units, when I shop with people that are not in your space, like much lower, we mostly look for how the demographics are changing in that area, and how maybe if it's not exactly the money we want to make now, we know that we're going to get a serious pop, and let's grab at a lower price now and then go. So it's less money versus less money like as it is now, and more where that area is going. But you can be more flexible when you're 3 million and under. It's not like you're dealing with a massive amount of debt.
Sure. But I think that is really ultimately the types of approaches, or like the distinction between different buyers is, are you a cash flow buyer? Are you sort of an upside? Are you a redeveloper? Are you a land banker? Are you looking for the appreciation play? You don't need.
So you have those different.
Absolutely.
This is the discussion. So I did a podcast yesterday for people, and I got invited to, and they asked me for my thoughts, and I'm like, man, I said, I don't really deal in 100 or 200 or 300 units. I'm dealing in 2 to 5 units, and mostly the debt service, because people are, it's not cash buyers. So most of them have debt. I'm like, I just tell people, you're not going to make a ton of money month to month on rent, because the rent's paying down the debt service. So you own the asset. It's what's happening in 2, 3, 4 years and what you can do to the building, where I think that 2 to 4 unit buyers, which may be different when you're 50 or 100 or 1,000 and you've got such a huge portfolio, and that month to month rent is really which is turning. But that's interesting that even in your space, you're looking at that too. Yeah.
I mean, I think the spotlight is on that at the moment, in light of the way that the migration has taken place and the demographic shifts that we've.
So when you just go into that a little bit more in terms of, just so people that are listening.
Sure. I think that, if you've seen any headline, it's about sort of, folks moving to the Nashvilles, the, South Floridas, the Carolinas, like the Smile or the Sun Belt, whether it's, going west to Arizona. There has been a massive exodus from places like Chicago and places like New York. And that's not to say, I'm not going to get into like, where Chicago stands as in terms of population growth, because some of those citizens have been replaced by other parties. So it's not like
because there's no vacancies.
Right. It's not, but the caliber or the quality of folks that have left Chicago to go finally to either some more sunshine or to a higher growth market, those places are experiencing significant rent growth, significant vacancy absorption. And when you're looking at those kind of major fundamental shifts in the way that the world is working and playing and living, it just, you want to make the comeback on, okay, I think Nashville, has had an enormous surge in rents, and everything has kind of gotten so crazy. And most people believe that there's still room for it to run. And whereas here, we've sort of hit a little stagnant kind of moment in the market, where there was great retail leasing absorption and great, residential leasing absorption. I feel like, the residential rents have peaked, or at least, started to not necessarily continue with the trend that they've had over the last 3 years. And those are the markets where investors are willing to say, I don't necessarily need to get rich on the cash flow today. I want to put this on the shelf and be able to come back to it. Now, again, not every buyer has that mindset. I mean, some people, if you have a return-driven strategy, or you've got, if you're paying a dividend or you're returning some dollars to your investors, there might be some preferred equity that has to get paid. So you need, yield in order to do that. You can't just tell them it's all going to come, at the end of the rainbow, I promise. So it depends on what the investment vehicle is. If it's a family office or, high net worth individuals and that operate and function very much like an institution, they are far more inclined to, either be low leverage or no leverage, and look at the fact that 10 years from now, that market is going to be, those rents are going to be double what they are today, or that asset from a compression of cap rates is going to be significantly more valuable than it is today.
With the run up from, the free money, the rent, the low interest rates, this and that, have you started to see, obviously cap rates were being extremely compressed. Are you starting to see them open up again? Are you starting to see bigger returns?
Yeah, absolutely. I mean, I think the risk adjustment that's taking place, or has taken place, as the liquidity in the debt markets has changed, and as the perceived challenges or timeframes around creating value have extended, investors are insisting upon kind of more return for that patience. It doesn't feel like a scramble or a foot race. Everyone is sort of pausing. And that is, I think, a direct result of, I had read that this was fascinating. Do you know how many times the Fed has ever raised interest rates by 75 basis points in the last 50 years?
I'm going to say maybe during the .com. Maybe.
I mean, you are like a student of that space.
I'm trying to think of when I was on the floor, because
one time in 45 years, they've raised interest rates by 75 basis points. They raised them 4 times by 75 basis points last year.
Did they say when the time was?
I think it was like the 90s.
It's got to be like 99.
Yeah.
It's got to be when things were just on fire.
It's so for them to have done it 4 times inside of a calendar year was unprecedented. And I think everybody was just, you probably experienced it, where people were like, let me buy something while money is still, cheap relatively.
Yeah.
And it was moving so quickly that I think people were still acting in an effort to beat whatever the
Fed
final result was. And then there was a moment where all of a sudden everyone's like stopped and caught their breath, and they're like, wait a minute, why am I buying a 5 cap or a 4.5 cap? This, one, money is not, I can't borrow at the same rate. 2, like, they're throwing the brakes on this thing, and I'm not sure exactly what the end result will be, but it's certainly not going to be what it's been. And so that forced yields to kind of blow out. And I think you watched it happen real time when you had a deal in the market, and either your bid-ask spread was significant and no one was willing to blink. The seller wasn't willing to take a lower price than sort of whatever they agreed with their investment committee to go to market at. And the buyers were not willing to step up in order to win a deal, because they just felt like there was inherently more risk than anyone was pricing.
So who's winning on your side? Because in the residential, the sell side's still winning.
Yeah.
It's still, because just the absolute, and I don't know if you have this issue, but there's an absolute liquidity problem in residential, right? So it doesn't matter. I did a video, I want to say like last summer, and they were like, when they started raising rates. And I was like, listen, I don't care how much rates they raise. If there's 1,000 buyers for 10 homes and they raise rates double, there's still going to be 50 buyers for 10 homes. If you can get rid of all the buyers, right? And you're still going to have this select few, but there's just no inventory. So in the residential end, I mean, I still have multiple offers. I still have over asking on everything. Nothing lasts more than 6 days. It's
wild.
Fucking nuts still. Like still.
That's wild, yeah.
And it's just we have less than a month and a half of liquidity in the city of Chicago. And then you get into like Bucktown and you get into Southport Quarter, and then you start looking for homes. Forget it. You're like maybe 2 homes. So you have like 40 people trying to get into Burley, and there's 2 houses. It's like, so I don't know where commercial is on that, but also you have 30-year paper, right? Commercial, you got to be like, okay, hold up. This is going to reset where are rates going to be? And then where's the bank going to evaluate? And is there going to be a capital call? And am I going to be screwed?
Right. No, I mean, your command of stock and velocity within your, sort of sandbox it's quite different on the, I can, list however many grocery anchored shopping centers there are in the greater Chicagoland area, but those are not like, they're not sort of on the market at any given time, or there's not like a clear inventory or list of buyers that exist for them. There's capital is constantly reforming and recycling around. Like somebody might leave a firm to start their own shop. They're a new buyer that hasn't shown up on, bid sheets before or in comps. So, and you may not even be aware of them. I would say that there is a massive chasm of the high quality assets that people want and that they will buy in any environment versus the tougher stuff.
Garbage.
Yeah. One way to say it, I guess.
Garbage.
Yeah.
I mean, that's what I say. I'm like, well, what houses are on the market? I'm like, this is garbage.
Yeah. And, and I don't.
But are those prices falling to attract?
Yeah, I think the divide has
At some
grown.
point, you got to be like, drop. Oh, okay, I'll take the garbage.
And even the good stuff, if it's really chunky, like the bigger deals are just harder to do. There's just not as much of a willingness to put $100 million to work, especially, in Chicago or Cook County for that matter.
Yeah.
Between, crime and taxes, like people, as far as institutions go, have really kind of opened their eyes and raised their eyebrows to like, what is going on here? And are they going to get this under control? And so, I think the election the other day was, although the results are yet to be finalized, I think it was sort of a step in the right direction.
Well, you have to hit rock bottom before you can go up.
We're doing an AA here? Or, it really is.
Chicago was in an AA environment.
It was bad. I mean,
bad.
But yeah, I think that the good stuff really is desirable.
It's still. So there's still.
But they want more yield for it too. I mean, there's definitely, and when you said, is it an absolute, seller's environment? We're, it's almost like, let's check back in a quarter or two, because I'm coming off of the fourth quarter, which is historically really strong. It was the worst fourth quarter we've had in, I don't even know how many years.
It was my worst fourth quarter in 15 years.
Because everybody sort of was doing what I was mentioning earlier around like catching their breath and sort of assessing where things are and what they should be valued at. And then we all felt like once the calendar turned and everyone was talking about allocations refreshing and, kind of having a new horizon and a new mandate, that didn't really happen because I don't think anyone had any more clarity. There weren't very many data points to refer to in terms of where pricing trends had gone. So everybody was like, I think we're going to wait till the second quarter. And then I'm not going to be surprised if in the second quarter, they're like, we're going to wait until the third quarter because and then eventually they're going to have to they have dollars that they've got to put to work and they've got returns that they've got to pay or investors or they might have to give the money back, and nobody likes to do that. So
yeah, it was interesting. Sophia and I went to, they had, your brother's company hosted it. Sterling Bay had a thing on commercial, this and this, and they had the guy that owns like presidential towers. Like they had big guys up there.
Waterton.
Yeah, it was really, it was a 2-hour thing where like 4 people got up and just talked about what you're talking about. And it was interesting to hear them talk about money finding different places, this and this. And, the one guy that runs Sterling.
Andy?
Yeah, the junior, right? The son. The Crown.
Oh, that's Keating, yeah.
Keating was there. And he was like, I don't know these guys' names, but he's like, listen, he's like, until they figure out politics and taxes here and realize that they can't just keep crushing commercial, he's like, I don't know what's going to happen. And it was interesting to and he's like, and no one wants to take on, no politician wants to take that challenge on. And at some point, someone has to take it on and be like, hey, you can't have all this outflow without inflow. And if you're talking about, in the space that you're at, these are the people that actually keep the city afloat, in my opinion.
I agree. It all starts with, huge business that employ people. So thousands of jobs make all the difference in your tax base and allow for you to then start to talk about diversity and inclusion, start to talk about, healthcare and schooling, and start to talk about all that. If you have no tax base, if you have no, to lose Citadel and a guy like Ken Griffin, I think his civic contributions were, they totaled up to like $700 million or thereabouts. I mean, that's Bruce Wayne. He's giving money to
for Lightfoot
the lakefront.
To tell him to fuck off. It's like, dude, are you insane?
Yeah.
And it's not just him leaving. It's the 1,000 gazillionaires that left with him that just spend
all of his
money.
Yes. Those guys all are pretty well minted and are supporting different charitable organizations.
Yes.
And it's a absolute, travesty to lose folks like that and to have contention or acrimony with your mayor instead of, she reprimanded the CEO of McDonald's when he spoke at the Chicago Economic Club, and like, he was talking about how Chicago is a city in crisis, and she was like, he's, detached from reality. He doesn't know what's going on. It's like, no.
Dude, do you not watch the news?
Pick up the phone and call him and be like, how can I make sure that you are happy? You are a global brand that is critical to our mission in Chicago. I don't want you to think that we are.
And here's my thing. I parked on Wrightwood because we're doing a project right by her house. If crime's not an issue, why do you have 12 police people in front of your house?
Right.
Well, it's like Fort Knox in front of her place.
And whose brilliant idea was it to, when they're, in order to establish in order to establish a sense of safety, you put cop cars on every block on Michigan Avenue with their blue lights rolling. I don't know about you, but growing up, like if I saw a cop car with its lights on, I didn't be like, oh, it must be safe to walk over here. It's like, oh, some shit just went down.
Yes.
And that, we've lost touch with sort of how we're going to be treating people, or re-inspiring people to come back to our shopping corridors and our tourists to come back to our hotels and workers to come back to the office. It's the easiest excuse or cop out to say, I don't feel safe. But I don't think that they're all, blowing smoke. I think there's a legit sense of fear. And, the two greatest motivating factors in any decision is, fear or desire. And if you are in a fear-based mindset, people are going to just sort of stay put or go elsewhere where they don't feel scared. And that's evident in the Loop and on State Street and on Michigan Avenue.
Yeah. Right. So what are your thoughts on how they can revitalize that? What can they do? They've talked about doing, we talked before we started about doing some residential there. And then I've heard things that was actually at that conference where people are like, we've looked at the numbers. He looked at the numbers. He's like, I don't know how it works, how you retrofit something that's not built for residential, doing heating, cooling. This, he's like, it's a massive undertaking.
It is. I think it all comes down to basis, right? Anything can be reimagined or redeveloped at the right basis, depending on what you're buying it for or what kind of tax incentives or TIF, increment financing is available to you. It can be done. Now, the bigger question, when you look at it and say, should it be done? Is that really where we are at, where this entire, block of inventory of old vintage office product should be taken out of circulation and put into residential? I think there's a lot of questions or a lot of answers that are required in order to get to the point of, should it be done? And then can it be done? Or how much will it cost to do it? And I think that, when you're putting up these towers in order for these businesses to attract talent and to convince people to come to the office and to contribute to a culture, and to share and collaborate around a conference table, that is, I think, a really critical piece that I don't think anyone denies is a valuable, a value driver to like working in an office and you coming here and what kind of access you've got to your counterparts. So that product type, though, is uninspiring. It's uninspired. It's old. It's functionally obsolete. You got low ceilings. You got bad window lines. You've got sort of tough floor plates. It's not sort of set up for, the company of the future. And so who takes it? They tend to be bargain hunters or value seekers. And then those people are like, well, we got this office space and it's in an old vintage building, but we can't get anyone to come to the office. So like if people resist or reject going, at some point, those bargain hunters are gonna be like, you can't give me the space for free, or I can't just pay CAM and taxes. I can't get anybody to come here. And so as you've seen this migration into these Class A, trophy towers, like most of those have done and are doing well. And it's all over the Real Deal and other trade rags about like the trouble that some of these big office owners in New York or in South Florida have, They want to keep pointing to the ones that are doing well in their portfolio, and those are the new towers. And the old ones are having these debt maturities, and they can't, they got
what do you
nowhere
do
to
with them?
I mean, if you're going to repurpose
You tear them down?
No, well, some of these here are, landmarked. So you're not going to tear them down. And I also think that like there has to be enough demand generation within the loop to have people want to live nearby whatever they're being drawn to the loop for. So if you lose Boeing and you lose Tyson and you lose some of these companies, in the midst of telling everybody, you got the biggest dick in the city, you lose those. Ever. Yeah. You lose those companies, and then you've got all this office product that's going vacant, and you're now wanting to convert it to residential. Well, who's going to be your rentership?
Yeah.
Like, what's the demand that they're coming here for in order to prove out that you're not going to just build it and they will come? Like, I don't think that's the solution either. I think it needs to be really thoughtful, and right now, between a lot of the amenities, the restaurants and the stores in the loop that have closed as a result of the lack of office and daytime population, like there's like this whole cycling.
A tumble,
yeah. It's definitely, a multivariable calculus equation that I didn't do so well in that class. So
I know, but you said that very nicely. Jesus. Say that 10 times.
I'm going to
Probably not. Leave it once. You hit that once. You practiced that on the way over here.
I did not.
Yeah, I mean, because, I will say that River North and downtown inventories in residential have really lowered. That's actually gotten good. We've gone from like 14 months to 4. So there is a pullback. People are coming back. I do agree with you too. It's a great pod with Zuckerberg and who's the MMA guy?
Joe
Rogan. And he literally brings that up. He's like, listen, the metaverse and Oculus and where we're going with this thing, he's like, it'll never replace the office. And he's like, and they have studies like where they study people's brains and what gets released. And when you're in front of somebody, the brain knows when it's not a 3D image. He's like, we can't replace that. He goes, we've done enough studies. It's like a 2-hour podcast. It's really, really cool. And he talks about the fact that, he's like, international travel may slow down because we can just pop up and do, and you can be a hologram, and we can have a hologram of like the Avengers and have a hologram of like 6 people around talking about what they want to do. He's like, but in office, he's like, we at Facebook have people come in office because water cooler, sitting down. He goes, that's when you really get collaboration done and people get attached to the space.
Well,
so I'm hoping that, but I never thought about that, but you got to feel that some of those spaces are uninspiring. And then that's kind of why you have that split between like being in a new building on Wacker that's gorgeous, like the Deloitte or this or that, or being on Michigan Avenue with 8-foot ceilings and no light and, and shag carpet.
I think at this point, all the shag has been taken out.
Shag.
No, and we're social creatures. We want to be, I think, relationship and community are kind of the two underlying things. So whether the connection is actually the piece of it that we want, no matter how much of an introvert you are, no matter how much of a recluse you are, like at a point in your life, like the connection or relationship or community that you are a part of or were a part of or seek to be a part of is what will drive your desire to be back in a space to be social again. I think we all got a chance to kind of take a breath, which is where and why the migration happened. You got all these people looking around being like, why am I living in this place? It's freezing. It's gray. They're crime. Like, I'm going to go someplace beautiful. If I can work remotely, why am I here? And the quality of life or caliber of, my experience has been diminished. So I'm going to go elsewhere. And then I think they get there and they realize, I don't have any friends. And they're starting anew. And I think when you get taken out of your comfort zone, you sort of are challenged to do more with, and meet people and try something different instead of being so complacent and comfortable. So I think we're kind of at that point where I don't think we're ever going back to what we were, because I think everyone got perspective on what it was like to eat breakfast with their kids.
So we're 52 to 53% back full time. What do you think that number goes to? 70? I think enough people get fired at home, they start freaking out.
Oh, of course. It's very different when you're in a tight labor market. The fact that they're laying off 10,000 people at a time and stuff, you're going to have people that are hungry to get a job and they're going to be like, fine, I'll go to the office. Like,
people come to open houses and they're like, I'm just sitting there, how are you doing? Blah, blah, blah. And they're like, well, we're going to buy something, but a friend of mine got fired or this person, so we're kind of nervous. And I literally say to them, I go, do you work from home? And you make over $100,000. They're like, we work from home. They don't tell me their numbers. I go, you work from home and you make over $100,000. You're a 50-50 shot. You're going to be gone next week.
Yeah.
I'm like, the manager's got to see you. They're not going to fire people they like.
No, I mean, I think 2 years ago, Zell was interviewed and he's like, it all ends when you are zooming to a pitch and some young guy or girl who's hungry and ready for, to take a step forward in the career, gets on a plane and goes and meets with the client and sits in front of them and pitches and wins the business. You're going to start traveling again. You're going to go back to the office. Like it is about, the fear of loss and where
I've lost 3 deals from people getting fired from like Salesforce or this or that. And like when the agents call me, I literally say to them, did they work from home and make over $150,000? Everyone was like, yes, yes, yes. I'm like, dude, come on, man. You're working 10 hours a week. You're going to get canned. They know what you're working. They know keystrokes. They monitor all that stuff.
Yeah.
So that goes into my next thing. Being a social beast, being social and having this and that. I know it's not as much in residential, but what is this like for people that are thinking about commercial? What is the social life? I mean, I know it's such a relationship driven business. When you were getting your chops and going up, how many nights a week were you out? Don't lie.
I mean,
and what was your average bedtime?
A little bit off the.
What was your average bedtime?
I skew the numbers because I was out, all the time.
Yeah, but you have to be.
Yeah.
It's that business is so like people are always like, why don't you get a commercial? I'm like, dude, I'm married with kids. Like, I'll be divorced in a week. I mean, you're out all the time.
Yeah. Because as you have folks, it's very different. I can't remember the last time I drove somebody to a showing. Like you meet them at a property or they fly in from New York or from London or from whatever, the West Coast, and you've got them for, 24 hours or 48 hours. They're meeting with lenders, they're meeting with leasing brokers, they're meeting with other people. So like you'll get a block of their time and you want to make it highly productive.
And if they're overnight, you're gonna have dinner, or you're gonna hang out.
So you might tour them, meet them in a building, show them a couple assets, and then they're gonna go do 3 other things, and then you're gonna meet again for dinner. And people do business with people they like. I mean, you either have to be the absolute best and only game in town. Like if you want to dominate a market and like you don't have to be social because you have an 80% market share, like that's a different story. You can kind of. But in a hyper competitive,
are there people like that? You don't have to say names, but Chicago can't be like that.
Perhaps in a particular discipline, but not in my space. There's nobody that has that kind of dominance and market share. And people do business with people they like. And how do they grow to like you? Like you earn their respect and trust on your mastery of the information and your position on what markets and what tenants and what assets are ones they should be looking at. And then after that, you kind of, you evolve it into a little bit more of a third dimension of like, what is that person like at home? Or like, can I enjoy talking to this guy? And so there's, I sold Tao and RH last year. We had launched them.
Congrats. Huge spots.
Those were big deals to do in a post-COVID era.
Yeah.
And we launched them pre-COVID, had them both sold, and then literally like they were under contract in February of 20, and by April of 20 they were, falling apart at the seams and everything was closed and the city was shut down. And so these were like, I don't think these are good buys anymore. I don't know what's happening.
A deal like RH from conception to close, how long is that?
Well, I mean, that's if you
2-3 years.
As a result of COVID, it was, yeah, for sure. But I mean,
in a normal environment,
I would say 8 months, 6 months.
Yeah, those are A+ buildings.
Yeah, but my point was that is a guy after selling one deal and then doing a closing dinner or touring them when they were in the market and like having some dinner, or having drinks, or having lunch, or having coffee, or being at different things together. We became, much more friendly than we were, before.
And he's going to remember you.
And then he bought a second deal from me. And now, we just, we're launching the Signature Room, which is the 95th and 96th floor of the John Hancock.
So it's like a revamp, or?
No, they have a long-term lease. I mean, they were absolutely crushing it for a very long time. They suffered as a result of the pandemic, like most restaurant F&B operations. But have been sort of climbing back out of that with, ever increasing sales. And so that will be a similar deal. I mean, it's unique space, much like Tao is. I mean, that was like Excalibur, Limelight, Castle. I mean, that thing has been a
what was the
staple
bar?
in the
What was the
nightclub.
bar to the side? So it was Limelight, but Excalibur, but there was
it starts with an R, I think. There was Castle.
Because that was kind of that was the bridge and tunnel people in the other building, and then us cool people went to the small one.
Oh my God, what was it called?
I mean, it's like 20 years ago, if not more.
Yeah.
It has to be more because I've known Nikki for 20 and it was way before her.
Yeah. I mean, that thing it has been
just pumping.
Like a cornerstone.
Is Tao still, is it packed?
Well, I haven't gone
recently,
I know. But yeah, I mean, they were, when we sold the deal in the middle of last year, they were at like 92% of where they were pre-COVID. And in pre-COVID, they were like on track to do a $30 million of sales in a year, which is immediately put them at the top of the pile in terms of Chicago productivity.
That's awesome.
So they, I think
are those people nervous about what's going on politically and stuff like that?
Who, the owners or the operators?
Like the owners of big stuff like that. Like, do they?
But I mean, I think at the end of the day, people want to blow off steam, and I think that demographic too, like who we were and where we were in our lives when we were going to, Limelight or whatever. That's if that was open during the pandemic, it would have been packed every night. Like they were 25 years old. They didn't care. Like, look at anywhere else in the country, Florida. I mean, people were raging if they could. And here we're like,
that's why the governor sent his family there, so they could rage on his private plane.
Get me in trouble on this thing.
While we were on lockdown. While we were on lockdown.
No comment.
Everybody, don't leave your house, guys. Get the hell out of here. Go live your life. I know it's real. Anyways.
Really challenging my diplomacy.
That's okay. You don't have to comment. I'll do the comments.
Okay.
So that's like I mean, you're so intertwined with that upper echelon. It's just interesting, especially, you did a lot with Starbucks too, right? Back in there, am I losing, or it was just that one place?
I mean, we sold half a dozen or 8.
The Esquire and all that. Were you working with DRW? Were you working with Drew?
So DRW's sort of a real estate arm is called Convexity.
Okay, so that's all that.
Yeah, and I'm not sure who Drew is, but
that's Donnie. That's the owner.
Oh,
sorry, that was his badge on the floor.
Oh, I was like, wait a minute.
Yeah,
there was not a Drew there.
Yeah, so I'm sorry.
Don has a very, very skilled, knowledgeable team, and is involved in those decisions, but like he has some real estate expertise in there that second to none.
Is he like the biggest now? Like if you were talking about like
traders?
No, not trader. He was single-handedly the biggest trader in the world for a while. I don't know. I've been detached from that, so I don't know anymore. But in terms of real estate, like a single guy, is he the big guy? Is he like a...
No, I mean, I think ultimately at his core, he's a trader. So I think he made brilliant trades. They made brilliant trades and bought in when...
Well, man, he was making $30 to $50 million a year in 08, 09 when everyone else was dying. They were like, it was like a cash register over there. Not just him, all of them. And then they just turned around. It's like anyone would do. Let me get out of this and get hard assets when they're cheap.
Yeah. And so he did that. And then
I heard he owned Roby. I didn't even know that.
Yeah. A lot of those, they exited a lot of the stuff, at least that they have here. And, as far as whatever the balance of his real estate portfolio looks like, I don't have visibility to it. But no, I mean, I think that he's incredibly...
Someone brought me up that he owned the Roby, and I'm like in the back of my... And I haven't thought of him in 10 years. And I was like, man, that motherfucker owns everything. And I think he owns most of Oak. I think he bought that unless he flipped it. But I think
that was the Esquire. No,
okay.
That was what... Yeah, and then now we sold it to Amancio Ortega, the the guy who started Zara
Okay.
or Incotech. So one of the richest men in the world. He owns some of the, I think, most premier assets on the planet. Whether it's Champs-Élysées.
I was watching
Rodeo
like,
Drive.
like one of the stupid stuff that comes on your phone is like richest people. And I saw owner of Zara. I'm like, oh, okay. They're selling a lot of clothes, but it's always real estate.
He
It's always
also
real
owns
estate.
the pedestal that the peninsula is on, like, so where Tiffany's and Ralph Lauren and, I think it was Victoria's Secret and Banana Republic, but those have been, so he's got those two, trophy assets in Chicago and a ton of stuff in Florida, a ton of stuff in New York, a ton of stuff in LA, in all of the, Newbury Street and then Bond Street in London. And
See it? You got to open up a business with cheap clothes and the sky's the limit.
yeah, I mean, there's a lot, those guys, whether it was Topshop or Uniqlo or Primark, I mean, the fast fashion folks.
Where do you see that? I mean, obviously this guy's investing a ton of money. Where do you see, where do you see retail going? I mean, I still go into stores, but I'm also almost 50, so I'm a dinosaur. I mean, so like, do you see a swing back to getting in and touching stuff?
Absolutely. I'm a
because
dinosaur
Best Buy
too,
was
but-
doing great until, I mean, I'm sure I don't know where they are now because I haven't looked, but I remember like retail, you even told me was like really on the up.
Yeah, I think that, all of the stuff pre-pandemic was like the retail apocalypse and all the store closures. It was so overblown and I think it was attributed to now look, consumption has changed. Like e-commerce and online sales have changed the way people shop, but ultimately a lot of those bankruptcies and a lot of what the apocalypse was sort of, was incorrectly attached to were these bankruptcies and these closures. Those were brands that sucked and should have been dead a long ass time ago. They were burdened with a bunch of debt during the LBO era and had been like limping along. Is there a place in the world for Toys R Us to exist? I think so, but their balance sheet was so riddled with debt from corporate raiders buying and trading and doing stuff and borrowing against it, that they just couldn't sustain in an environment where their debt service, was suffocating. And
I love Toys R Us. I used to with my kids all the time. It's the best.
And a great jingle. I mean, that shit's still very fresh in my mind. But so I think that the store is absolutely back. The consumer, Amazon messed with everybody's paradigm. They basically made you think that if you, bought 7 pairs of shoes and returned 6 of them, and it was easy, that like it was also profitable. Not so much, and so
that's a pain in the ass.
Well, but people do it regularly. Oh, yeah. And I think like you're starting to see in terms of if you return it to the UPS store or you return it to a Kohl's, it's free. Or if you have to do this, you got to.
Nikki returns everything to Kohl's. And then she's at Kohl's and she's buying shit.
That's why Kohl's invited that, engagement.
Smart.
But the store, so as omni-channel, as that word and that concept sort of blossomed, people realized it was becoming more and more expensive to acquire customers online. So if you were an Instagram or a online store, to be able to do the customer acquisition experience where you're marketing or paying for SEOs and stuff, it became cost prohibitive. So they were like realizing, if we want to acquire new customers or we want to give customers a place to at least experience what this brand is 3-dimensionally, touch and feel, try on the size, make sure that it's what it all is, and give them an experience that helps, present ourselves beyond the screen, we need a store. And so that's why you've started to see Armitage has become, I think, like a really great bellwether of the digitally native brands that have come back into, the idea of we need a store. Everyone thought everyone's just going to go online. What we also saw that was fascinating to me is that as some of these retailers would close stores that weren't doing well, their online sales, their e-commerce within that region dropped precipitously because they became out of sight, out of mind, and people became like, if this Marshall Field or whatever, Macy's closed in our market, they're not moving any product from people buying online there. And suddenly whoever had opened the store was actually seeing a pretty big lift. And so I think that the store is imperative. I don't think stores need to be as big as they were. I don't necessarily know if it makes sense to carry the inventory that was once carried in the physical store. I think RH was the absolute trailblazer in that space where it was like, we're just going to build a sick ass showroom. You come and experience our products,
relax.
and then we'll, fill out the iPad with your order and it will get shipped directly to you from our warehouse,
and think
where
of
they're
all the
paying
people that,
a fraction of the rent that they're paying. So they're really monetizing every inch of that store rather than having back of house where you're paying the same, rent obligation to store shit. No, store shit in Bensonville and ship it, for $5 a foot versus $55 a foot in the Gold Coast, or more. So I think that is part of why the store is changing too, and why you're seeing so much demand. I mean, there's not enough space on Armitage or Southport for the amount of tenants that want to be there.
I love Southport corridor.
Yeah.
That's really interesting. Why did the Amazon store close? We're going to end on that. So Amazon tried to get into this, walk in, pay, blah, blah, blah. I just must be an ass because all the stores we went to closed. I went to Amazon bookstore all the time because my kids loved going there and they liked seeing the book versus buying it. You think Amazon has enough money, that sign itself has got to be great for them. And we talked about Toys R Us, but Amazon.
Well, I want to just piggyback off something you said. You are an ass.
Yes.
So, and then why Amazon closed? Boy, to end on this, we could have started on this and it could have been the entire podcast. Amazon is ceasing. They open all these grocery stores.
Yeah. So the Amazon
they're
Fresh.
closing. They're pausing that. I think one, they have enough money to get into every game that feels like it could be lucrative and figure it out. And they're smart enough where they, have figured out a lot. They did not figure that out. And I think that grocery is the same way. I saw a guy speak at a conference that I attended last year, and he was saying some shit that people were felt was super controversial. And he was prescient. And he said, I guarantee you they're going to close all the grocery stores and they're closing all these things. He goes, because Amazon in and of itself doesn't understand why someone is going to the store. They know based on your shopping patterns, they can put stuff in front of you. They can know that you're almost going to be out of milk or you're almost, time for a new coffee order or whatever. But people go there as a point of convenience. The behavior driver for someone going to Amazon is that they don't have to go to the store. But why you want a particular product was never part of their game. The brilliant retailers are merchandisers, like Fred Siegel in LA or the Nordstrom or Barney's for that matter. They were curating a store and a collection of whatever fashion or lifestyle products, and people would go there because they wanted to see what the hot new product was or what was cool. To do a 4-star store, I don't know about you or a bookstore, they put a bunch of stuff in a store that was 4-star rated, but to me, is that a gift shop? Why am I going into a 4-star store?
It was a gift shop.
And
that's what I thought the place on Southport was. So my kids, when they did something good, were let's go to the Amazon place and you can pick out a book.
Yeah. I think but Barnes and Noble, so Amazon knew what SKUs were selling off their e-commerce. And so they filled, and they knew this neighborhood is really about self-help and about,
So that's what was in there.
So that was in there. But I think that, why they got into a lot of games and are getting out of a lot of games. They've built an incredibly expensive infrastructure for logistics. That's why you've seen them. They single-handedly changed the flow of industrial or the distribution fulfillment market, which has been white hot for 10 plus years. The people that do what I do at Cushman and all the other big firms have made fortunes over the last decade on just the industrial segment. And as a result of these 900,000 foot leases that Amazon is signing. And the moment they were I think we might have enough space or perhaps too much, we're going to not, fulfill this lease obligation. That sent shockwaves through the system. And you started to see everybody pull back and go, well, wait a minute, if Amazon's slowing down. So I think that they're in a moment where they're retooling and figuring out who they want to be, what value, proposition they really offer beyond just the convenience of, I don't want to go to the store and park and go in and get all the shit so it can show up at my door. That will never lose its hit or hook. People, if you're busy and you don't want to go to the store, but there's other stuff that I want to try on. I want to touch it, feel it, see it, or I've done all of my research and now I'm going to go there and see if, I can get it and they can deliver it to my place for free. They are pretty. I mean, the Whole Foods acquisition. There are so many interesting things that they've done. That as a student of the business and industry, I love reading about and trying to kind of more clearly understand why they closed Southport. I don't know the answer exactly. But I think like there was a lot of money being bled out of their revenue stream as a result of these new concepts that they opened.
Yeah. All right. And then, so our last thing, so this will be the last one because we are going over an hour. My longest guest ever. So you should feel privileged. The last thing is, does Nordstrom's on Michigan Avenue survive? Do they make it? Do they stay? And if that's a yes, what big retailer do you think is in the most trouble when you look at your space? And it can be somebody you don't do business with, so you don't have to say nasty things about anybody. But there's a lot of talk about Nordstrom's.
About that particular Nordstrom, about them as a company.
Them as a company, and that's a lot of retail space.
Yeah, so that was one of the most productive stores in the country for them.
And is it still?
I haven't seen sales reports on it recently. That mall, that asset, like Macerich, I don't know. That was a big headline a year ago. They sold it at a fraction of what they were into it for. I mean, look, I think vertical malls are really tough, especially.
Okay, this is vertical malls tough.
Yeah, but 900 has sort of been proving that theory wrong. I think Northbridge, 900 is where Bloomingdale's is, and like the Four Seasons. But they took the Bloomingdale's home store and moved in there, and so they've created a compelling experience for people to go in and up. The Nordstrom. The Northbridge Mall has lacked any real identity sort of in the front half of that. You kind of enter from Michigan Avenue and you walk up. The pedestrian traffic or the caliber quality of pedestrian traffic, the amount of tourism that used to kind of have the day to go shop is different. I don't know if that store closes. I think there would have to be a very compelling, and there are spaces available, right? The water tower is totally empty. There's all sorts of stuff on the east side of Michigan Avenue they could move to. But they just did that whole, sort of refit and, brightened it up and created that bar restaurant in the middle of the men's floor. I think the bigger, I don't know. I would be really surprised if that store closed as a result of just how great of a retailer Nordstrom is.
Who do you think is in the most trouble in the retail sector?
I think all of the tenants that sit in the middle of the continuum. Like, I think people are discount oriented and, value or sale oriented. That never changes. And I think if you're luxury or designer oriented, you are not going to accept this or this. Like, you might still buy one of your designers on sale, but like the stuff in the middle that lacks an identity. I mean, the gap.
So it's not like a Burlington coat factory and it's not a Chanel. It's like in the middle.
Right. It's the Banana Republic or the J. Crew's kind of reinvented itself. Banana's been trying to. Gap is trying to.
Abercrombie, stuff like that.
Yeah. It's just like the ones where it's like, who's that consumer? I don't know who that consumer is anymore. And so those people in the middle that are like, you're not quite cheap enough and you're not so fancy that everyone's gonna be like, oh, you got the new whatever. Like, it's sort of, very unremarkable clothing.
That was kind of a non-committal answer, but I'll take that from you.
Well, I got to do with people. I don't want to offend anybody that's got a center with that tenant in it, or that I don't need the real estate.
Get out.
Being like, hey, I know you're shocked that I was watching Jason Theory, but I was, and what you said about our company, I take great offense to.
All right, cool. I really appreciate your time. It was super interesting. Everyone always asks me about commercial, so it was very, very cool. And commercial is the heartbeat of the city. Without it, you don't have tax dollars, you don't have workers, you don't have reinvestment, you don't have people giving to charities, all that stuff. So people really need to think about that. that's a direct message to whoever becomes the mayor or the governor or this or that this is what is, small business and businesses and people investing in our city is what keeps it afloat and creates all the other opportunities and some of the redistribution. So, dude, thanks.
My pleasure. Thank you.
We've known each other for how long now?
It's been a minute.
30 some years.
30 some years.
Yeah.
A little different than, Greek camp.
Yeah, Fanati. All right, thanks. You can check us out, obviously, on iTunes, Amazon, on our website, clopisstratton.com, on our podcast section there, and all the best in March to everybody. Thanks.
Thanks, Jason.